Welcome back to Intelligent Investment Today, the podcast concerned with all things value investment. In each episode, we take a dive into a different aspect of investment, attempting to apply the rules of the investment style as laid down by the man widely considered to be the father of the craft, Benjamin Graham, to the matter at hand. In this episode, we should be taking a look at something we don't regularly consider here on this podcast, and that is the art of intelligent speculation, if indeed it can be considered an art at all. There is, of course, plenty good reason for this, as speculation is the antithesis of value investment. But throughout this edition, we will consider if speculation can ever make up part of a value investor's wider portfolio, or whether it is best left to speculators to lose money in these more risky endeavours. So let's dive right on in. As ever, buckle up, sit back and get ready to take on board another lesson in value investment as inspired by Benjamin Graham. I'm guessing that regular listeners to this podcast might straight away have picked up on the unusual nature of today's topic in the introduction. For week in and week out, I bang the drum for intelligent investment, as opposed to more speculative opportunities, and yet here I am considering if some level of speculation should ever creep into a value investor's portfolio. One of the central tenets of value investment is, of course, being able to tell the difference between investment and speculation. Because in general, the term investment has become an all-encompassing one to include the purchase of anything that promises a profitable outcome, regardless of how likely it is to occur in reality. I've even heard people say that they invest in cryptocurrency. I mean, come on, I don't know quite what they are doing, and I'm not sure they do either, but investing they are not, at least not by my definition of the word. There have over the years been plenty of attempts to concisely define the difference between investment and speculation, and indeed you could probably write a pretty hefty book on it. But if you were to distill it down and down, ultimately you would arrive at a rather simple conclusion. Investment takes place when the price paid is justified by the facts. One's value is defined not by what is real and what is factual, in other words by hearsay, rumour, guesswork or intuition, then speculation is likely taking place. From this conclusion, it's easy to see why speculation does not fit in at all well with the art of value investment, where we are interested almost exclusively in the facts of the matter, those that we'll find in black and white in the company accounts, to ascertain if a stock of a business should be purchased or not based on its price. Those classic components of speculation, hearsay, rumour or intuition, make up no part of our armoury whatsoever. From this point of view, we should perhaps bring this edition of Intelligent Investment Today to a premature close and wrap things up right here. But wait, whilst many of us are strict adherents to the value investment approach, we also have a life outside the strict rules that guide our investment decisions. Some of us no doubt might like a bet on the horses or a trip to the casino. Some might even buy a lottery ticket in the hope of winning really big. And in doing so, we're all well aware that the chances are that we're going to become poorer for doing so. But we do it anyway because, well, they are fun activities to do. So why can't we add speculation to the list of these knowingly loss-making but otherwise enjoyable activities? Well, the fact is that providing it is done sensibly and intelligently, there is no good reason at all why we shouldn't. Whilst I sometimes feel that we are guilty as proponents of the value investment approach of demonising speculation and speculators, the fact is speculation is absolutely essential for any economy to flourish. If nobody was prepared to invest in Ford or the other car companies back in the early 20th century, then we would still likely be getting around on horseback. Speculation, therefore, isn't evil, it just isn't on the whole very profitable. So if we are to say that there is no good reason why a value investor shouldn't involve themselves in speculative opportunities, then what safeguards should they put in place to ensure they don't achieve a typical speculator's poor results? The first thing to say is that if you want to speculate, then you'll do very well to completely segregate, both physically and mentally, that area of your portfolio from the gated community of rationality that is your regular investments. To let speculative tendencies creep into the world of value investment is a fool's game, and you will get hurt. So if you really do wish to speculate and think you can keep these two areas of your thinking separate, then speculation in stocks is best thought of as a bet, in the same way as that trip to the casino or a flutter on that nag. The expectation all along should be that you'll lose your shirt. Approaching speculation in this way will mean that amounts allocated to speculative opportunities will be small, and they will be amounts that you can afford to lose, because the chances are you will. Speculating in this way can make for an enjoyable pursuit, a hobby, a pastime. You might even get lucky, but it will be down to the roll of the dice, and it is certainly not a sustainable way of getting rich in the long term. So you might well ask if this is an activity I like to involve myself with. And the short answer is sometimes. Casinos aren't my thing. I know little about horse racing. And lotteries, well, I don't like the odds. So to scratch that betting or gambling itch, I can think of no better way than to randomly sink a little bit of cash into some random business or another. I am of course careful to strictly abide by the aforementioned rules. Stakes are kept low, the lower the better. I make any decision to, in inverted commas, invest in a business completely separate from my investment operations, and make sure that not only can I afford to lose all my money, but consciously expect to do so. My current dalliance into the world of low-hope investment opportunities is with a small, up-and-coming UK-based newspaper group. The opportunity arose to buy a small stake in this unlisted business, and I was a fan of the newspaper, so I thought, why not? As a matter of fact, the financials don't look all that bad, and it has subsequently become profitable, with a growing subscriber base. But there was and is absolutely no logic for me to involve myself with it on value investment grounds. But being part owner of a newspaper group that I love is nice. I still live with the expectation I'll never see a penny back. Maybe I'll be in for a nice surprise one day. But this is the most important thing. The investment was for less than £1,000, an amount I could well afford to lose. You take that sum to a casino and you might get a night of fun. But I've already had 3 years of pleasure from that investment, so already it doesn't really owe me anything. And of course, with it being unlisted, it makes my stake impossible to value, or for that matter sell. I will only find out if it was a successful speculation, if and when the time comes that the newspaper is bought out by a larger group. So let's see how that goes. So to conclude, we can safely say that speculative activities, those where decisions are based not on analysis of the accounts to determine intrinsic value, but on an assessment of a business that is based primarily on some sort of intuition not grounded in fact, should make up no part of a value investor's thinking. That said, if an investor is able to segregate their speculative activities to allow themselves a bit of fun from time to time, then providing the stakes are kept low, with amounts you can afford to lose, and providing it is never forgotten that what you are doing is on par with racetrack gambling, then having the odd punt on some random business can be a nice breakaway from the formalities of our art. The results that follow will also likely prove a timely reminder why we've nailed our colours to the mast that is value investment. On that, I shall draw this edition to a close. I do hope that you've enjoyed it, and what we've talked about today adds a little something to your armoury when it comes to intelligent investment. If you have enjoyed it, please do add to playlist. That way you'll be alerted whenever a new edition lands on your platform. I'm David Coombs. This has been Intelligent Investment Today. Until next time, stay safe and happy investing.